Hi traders, well we're back for another episode of Technical Tuesday. Again, it's a pre-recorded show. I'll be in the TradingView live stream if you have any questions there to be answered. Let's get cracking. We've seen the dollar, it's coming off a bit yesterday after its run. We got quite close to that 99 level, that round number psychologically. The RSI's turned back a bit lower, but again, the dollar still remains above its 50-day simple moving average, which is a good sign for the bulls, and it's sort of held. It did drop slightly below the 21-day exponential moving average, but it is holding above that now. So yeah, targets wise, I'd be looking for a breach above that 99 and then to take out those highs there at around 99.3, and then that high there at 99.5 to go into 100. If we do fall below this level here at around 97, 97.6, 97.5, look for the 50-day simple moving average to provide some support. If it drops below then the bull should start to sweat. Let's move on to Euro US dollar. We saw quite a big sell-off yesterday. Price is trying to put in a bit of a bounce here around support around 109.5. It stopped there, and we've obviously got quite a lot going on for the European Union on Sunday with the French election, and someone are saying it looks like it's going to be a bit closer than originally thought, with Le Pen seeing quite a rise in the polls, narrowing the gap between her and Macron. Targets wise, again, a clearance of 110 would push us closer towards that 111 level, where there's a bit of support which would now act as resistance. On the downside through 109 would take us probably back down to around 108 to test that low. So yeah, one to watch there. Let's look at GBP USD. Again, GBP USD is really trapped below this 23.6 Fibonacci level, around this 135 zone, the 21-day exponential moving average providing a bit more resistance, and this horizontal line of resistance here around 132, just below. So yeah, targets wise, if we broke above 132, then we've obviously got to take out the 38.2 Fibonacci retracement level to get to 133. On the downside, 130 will be a strong line in the sand for buyers to keep cable on the uptrend. Euro GBP again worked out quite nicely. We saw it touch that RSI level there, the upper trend line of the descending channel, the 200-day simple moving average, and it's come back down now to the 50-day simple moving average. So will it get down to 0.83? That would be the target I'd be looking towards. And then, yeah, it's a nice trade, playing this channel. It's worked out quite well. Every other time it's touched that, it seems to be working, until it obviously doesn't. But, we can't call every trade right, can we? US dollar JPY. We've basically saw a bit of a retracement back to that 38.2% level at around 121. It's bounced off there. US yields are moving higher, so we're seeing US dollar JPY bleeding higher a bit here. The RSI just crept back into overbought territory, so we'll have to see what happens here. It is quite substantially still above its moving average, but in these markets, especially with the US dollar JPY momentum, tends to work better than mean reversion strategies with a trailing stop loss attached. Let's look at AUD JPY. Let's zoom in a bit here. Surging higher after that bullish, what the market interprets as a bullish RBA statement. They've dropped the word patient in terms of their monetary policy, and obviously also very keenly watching wage costs, as we know that's an essential part of what will make them move. June's now seen as a lock for rate hikes. It was August previously, and the December 22 contracts ratcheted up quite aggressively too. So AUD seeing those benefits spill over. Let's have a quick look at AUD USD, as that's one of the most traded pairs out there. And we can see, it's surged higher. It's the 50-day simple moving average looks like it wants to cross above that 200-day. We've got some strong resistance here at 0.77, so we'll see if price pushes up there. The RSI is in overbought territory, but things can obviously become more overbought. On the downside, there's obviously a little bit of support here around 0.74725, 0.745, so if price was to pull back, that's where I'd be looking. Or potentially even here, we saw some resistance, which could now end up turning into support 0.7535, and then on the upside 0.77. Let's go into commodities. Gold is trapped between this 19 and 1950 little mini range here. It's also being capped by this 21-day exponential moving average, and the 23.6 fib level at 1936. The RSI is just hovering around no man's land, and the percentage above below the moving average has crushed a bit, and it's not as overextended as it was there. So yeah, one to watch, 50-day simple moving average just above that 19 level. So playing the range, it seems, for gold. And then spot Brent, as it remains above the 50-day simple moving average, I think a buy the dips approach here will work best for any pullbacks. Once it breaks below there and maybe $100, then a short the rallies at playbook might need to be applied in a framework. The RSI, again, not really telling us much here. So yeah, we're looking more at the moving averages and support and resistance levels here. On the upside, price needs to overcome 115, bit of resistance there, and then above there you've obviously got that key psychological level of 120. We'd have to see a deterioration in some sort of negotiations between Russia and Ukraine to get us back up there, and then obviously below here, as I said, it's around 105 there would be key, and then 100 on the downside further below there. Let's look at interest rate pricing very quickly. The December contracts peaked up a bit. It's at 9.5 hikes, basically, the market's pricing throughout December 2022. So yeah, that's an interesting one. Fed are still, we've got the minutes out on Wednesday evening British time, so we'll see if those rate hike expectations ratchet up any further. Thanks for joining today. I hope you've enjoyed Technical Tuesdays, and you'll join me next week for another episode.